Hello everyone, welcome to the Ichimoku charts.com daily analysis for wheat for Tuesday, April 23rd, 2013. Well, a continuation of the trend to the downside today in a candle that's made a lower high and a lower low, continuing the trend that was established a few trading periods ago. A black body candle today, pretty much in line with the size of the previous black body, so the sellers are maintaining an equivalent amount of net bearish progress on the day between the open and the close and maintaining that downside momentum. This market has closed down through the important 700 round number level of support, but only just, and we don't have a lot of confidence in this breakout down below the 700 level for a couple of reasons. One is that the sellers have failed to take control of this market, so for the second consecutive trading day the sellers have closed above the midpoint level and the buyers have maintained the control that they had for the previous day's trading. This suggests that even though the trend is to the downside, that there may not be any decent follow through in this market. Also, if we look at the long shadow on this candle, in a similar way we saw a shadow that tested down to the 690 level for the previous day's trading, representing buyers coming in, representing a loss of commitment by the sellers at this 690 level, and we have seen this 690 level act as a very strong level of rejection in the recent past and will be a very important level for this market moving forward. So even though we have a black body candle, we don't have the sellers taking control of this market, so we're getting a lot of mixed signals with this market at the moment, and with this strong rejection from this 690 level we don't have a lot of confidence in this market trading lower. Now that doesn't mean that the market won't trade lower, but we do need confirmation of a breakout down below that 690 level. If we do see solid bearish activity down below there and a bearish close below, we have some previous support around the 683 level, and that's extending roughly down to around the 680 level, and any solid bearish activity down below there could see the market testing down to around the 660 to 656 level. Now bullish activity up above 700 could see the market trade to higher levels, but we do have very strong resistance overhead. We do have the Kijun-sen and Tenkan-sen trading just above 700, and also we have the market finding some previous close buy resistance around this 710 level, and we also have a cloud trading just above there, so very solid resistance overhead. So really a story where we have solid resistance overhead but solid support down below, and this market is forming a congestion area. Now in terms of that congestion area, it is forming a rectangle type of pattern. Here we have the market trading to higher levels here, and trading now this high trading to high levels is an uptrend in that first time frame, and then forming a congestion area that looks something like a rectangle. It's also very similar to a triple top that we're seeing at the moment. So here we have one test, a low, another one, a low, and a third test, and now we are testing to those lows. So there is potential for this pattern to be a very strong reversal pattern, and what we're looking for is a breakout down below the bottom barrier here. So a breakout and a close below this 688 level would potentially see the market test roughly back down to around this swing low around the 659 660 level. Rectangle patterns can be continuation patterns as well. This is a little bit big to be a good rectangle pattern, and the limiting factor here obviously is that the market, for a breakout to be to the upside, the market will trade within the cloud, and the top barrier of this pattern is at the bottom of the cloud, and really it doesn't really give us a lot of confidence in this breakout being to the upside. It certainly looks as though this breakout will be to the downside, and with the market trading down below the Ichimoku cloud, the bias in the long-term time frame is to the downside, and the most likely scenario would be for a breakout to the downside. But obviously, not trying to preempt the market, we do require confirmation of that breakout and close below that bottom barrier for this pattern, this triple top or big rectangle pattern, to be completed. Now, in terms of the Fibonacci extension, and we're examining the relationship of the first time frame downtrend to the previous time that the market was trending down, and here for the second day in a row we've seen the market rejected from below the 78.6% level. So this is suggesting that there is potential for this market to trade to higher levels, and when I mean trade to higher levels, we could see a change of trend in that first time frame with the market making a higher high and a higher low, and I suggest that if that does happen, then the boundary here up around the highs of that pattern and around the bottom of the cloud will be potentially the limit to that trading if we do see that potential reversal occur. Also, in terms of the Fibonacci retracement of the prior uptrend, we are seeing a similar story here. Rejection from below the 78.6% level. The market has actually closed down below the 61.8% level, so that could be significant. But we're not seeing any strength from the sellers here. The only strength that we're seeing is in net terms, the black body, but the sellers have failed to take control, and they did lose a lot of commitment when trading down around 690. This does suggest that there is potential for a change of trend with the market making a higher high and a higher low. Now, in terms of Ichimoku, obviously a bearish market in all three timeframes. The market is trading down below the cloud, so we have a bearish bias in that long-term time frame, and does give us more confidence in the breakout down below the triple top or the rectangle pattern being to the downside. But the market is also now trading down below the Kijun-sen and the Tenkan-sen, so a bearish market in the medium and fast term time frames, and the Chikou span is below the corresponding price action, so it is suggesting that this market will trade to lower levels. The only problem here is that we have the market oscillating above and below both the Kijun-sen and the Tenkan-sen for the recent past, and that's occurred while the market has been trading within this congestion area, so a lot of mixed signals over a decent period of time, so quite some indecision in this market in those medium and fast term time frames. But certainly what we should be looking for are these barriers and how the market reacts to these barriers. So 690 here is roughly at the bottom barrier, and a close down below there, as I've already suggested, could see this market quickly testing down to 656. The barrier to the upside is around the 1716, 1714 level, and will be a very, very strong barrier to this market trading higher.